We got some interesting stuff to talk about. There's a lot going on here to kick off the week. And this is a big week. Next 2 weeks are likely to be very eventful in the financial markets. You've got a lot of stuff happening. This Friday, we've got the jobs report, which will be really important to see what happens with the labor world. Are things going to stay, solid or strong enough as the Fed continues to look to cut rates? Or is there a bigger slowdown coming? That's the big question. I mean, taking a look at the markets here this morning, we've got the NASDAQ up. We've got the dollar about flat here today. Gold's down a little bit and oil's down a ton. I want to talk about that because, of course, this has a lot to do with the latest developments in the Middle Eastern situation, right? Between Israel, Iran, Hamas, all of the, stuff that's going on in that part of the world. Seems like there was some potentially good news, and that good news has oil prices down by 6.3%. Now, if this continues, guys, one positive is that, number one most positive thing is let's hope that there's some sort of peaceful resolution and that, things progress in a constructive way rather than a loss of life way in the Middle East. That's the number one thing. The number two thing is that this could help with the overall kind of story of inflation. And the number of three thing, for some people might be the number one thing, is that the gas pump is likely to be pretty cheap. Now, what we've got here is we've got oil prices. West Texas oil, WTI, is trading at 67.9, which is a fresh low here out of the last, month or so. It's been a real nice, kind of choppy market here recently. That being said, watch oil today because this is a really important market. Just like the dollar is really important, oil is also very important. If you're somebody who's like bullish on indices, for example, falling oil prices off of geopolitical conflicts cooling off is a largely good thing, right? Because what that could mean is inflation comes down, and terrifying, scary stuff in the Middle East is obviously not good from both a humanitarian standpoint as well as a stock market perspective. So oil prices down here this morning, 6.2%. That is a big slide. In fact, that's one of the biggest, down days that we've had. Over here, you had 4.5. You had over here just under 4. Today, you're getting a drop of 6.2% the price of oil. ZS Swift says, now the good news is that they didn't target oil and energy stuff. So yes, but arguably, even though that's not necessarily saying, there's peace in the Middle East now, that's not what I'm saying. What I'm saying is that if there's not like a worse than expected outcome, like they target more critical things that could lead to much, more devastating stuff, arguably it's a de-escalation rather than an escalation event. And if you're, an oil trader, then very well, escalation in war stuff has the tendency to cause oil prices to pop, and de-escalation or any less than expected stuff is going to be, it's going to cause the price of oil to drop. So oil's down big today. That's also leading part of the reason I think that the market is seeing a pop in the NASDAQ, the Dow Jones, the S&P 500. All of the indices are up here this morning. And the other thing is Bitcoin's up 1.5%, and I'm long Bitcoin, so this is awesome. I've got a nice little position running here. I've trimmed my stop loss, and I've got this one running off of the daily chart, although the initial entry was a entry off of the 4-hour chart. You can see right here, this is where I initially got into the trade. Price pulled back into this area, hit support, and actually came back and retested it a second time. But I am looking for an opportunity here this week. If we can see this thing start to take out through the highs, I'm going to look for an opportunity to start trailing the stop loss further into profit, which is always a good spot to be at. Other trades that I'm in, Euro not as good. I'm short on the euro off of the 4-hour chart. We had a nice slide on Friday, and now prices come back to about break even. So my euro short is, we'll see where this goes. We'll see if I hold on to it. Still have my stop loss above this level of resistance. If markets, shoot higher here, if the dollar drops hard or something, then I will definitely be, taking a loss on that if needed. This edge finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. This week only, you can have 100% free access to the Edge Finder. But don't wait. This offer is available for this week only. If you want access to COT data, top setups, and so much more, click the link being dropped in the chat now to sign up. Again, this is 100% free access to the Edge Finder, available this week only, so don't wait or it'll be too late.
It very well could start bottoming out. If you start to see a breakage of this, right? If you start to see higher highs, higher lows, then perhaps buyers have found a low. But in my opinion, when we take a look at the dollar index, you had a really impressive end of week last week. You had a huge move up on the dollar, pulled back into this area, confirmed it on Friday. And we'll see. I mean, if you do get a big red candle that closes back underneath, then my idea is probably wrong. But I would not be surprised, as we've got the election as sort of a bullish catalyst for the dollar right now. Wouldn't be surprised if we do see this thing continue to just kind of chug along and go higher. So we'll see. I have a small position on it. If it doesn't work out, it doesn't work out. Gold is down here today for a number of reasons. But the biggest one is obviously the Middle East is a question for gold. And when that question is more questionable, more scary, gold typically rallies. But with the news that came out over this weekend, we did see an initial drop on gold prices, and they've sort of leveled off since then. They're down from where they were Friday, but they're up from the lows that we put in on the Sunday session. Stock market just opened up. Take a look here at the 15-minute chart for a second on the NASDAQ, S&P 500. Bit of an out-of-the-gate selling here so far. Russell's also up almost 1% here today. Russell index is, of course, small cap companies. It's something I track a lot. US 30, NAS, S&P. Let's see how NAS opens up here. You can see here's the Sunday gap that occurred on the NASDAQ. Big gap up. Probably because of the whole, oil prices dropping on good news in the Middle East. We'll see. That's a pretty aggressive opening candle. We'll see how, if buyers come in here or if this continues to, there's a possibility that I'd watch this level right here on the NAS. If we come down to that area, could get a bounce. But if you start to fade this area, right, then there's a possibility that we get the gap close. So anytime you see gaps in the markets, there's a couple of things you gotta consider. I believe this is called the gap window. That's the standard phrasing for it. This is the gap, right? So this is where we closed. We popped open above those levels. And what you want to look for here, what I'm going to look for is this. If it comes down to this area, how does price react? Do you get a nice pop off of those lows? And we just continue, start taking out highs. Or if you start to see support fail here, right? You come down to this level and we don't see the pop. We in fact see, on perhaps like the 15-minute chart or the 30-minute chart or something, you get a failure to hold that level of support, which this is generally considered a level of support. The gap open spot is a level of support. You want to see that thing hold. If you don't see it hold, oftentimes what will happen then is that the gap that was left open in the market gets filled. That's a bit of a technical analysis kind of insight that you just see it happen so frequently. You don't usually get Sunday gaps, but when you get big news over the weekend, that's very, very frequently what happens is you get big gap and the market either tests it and rallies from that, or it tests it, fails there, and then the market says, okay, we're going to test all this area again. You can call it liquidity, you can call it whatever you want to call it. Doesn't really matter. It's just a gap. And the market sometimes will go back to test that gap. Not always. Sometimes people make the mistake of thinking the market always goes back to fill the gaps. No, it doesn't. It does not. There are instances where it may run for 3 weeks before filling the gap. There are other times where it runs for 6 months and then a year and then 10 years and it never fills the gap, right? There's not a certainty that gaps get filled. Don't let that. You get these, there's so many little monikers and things that traders make up. Gaps don't have to fill. What I'd say is watch how price reacts when you get to this level. And if it fails to hold that level as support, there's a large chance, in my opinion, you would see that fill. Does that make sense? Hopefully it does. There's traders out there who trade gaps day in, day out. For Forex traders and futures traders, there's not that many gaps. If you're a stock trader, there's gaps all the time. In fact, a lot of people love to trade stocks because there is gaps. It's actually a very interesting strategy. Let's take a look at like Apple, right? Yes, you can trade Apple. Like if you're looking at Apple and you're looking for big gaps, you can see here's an example of exactly what I said not working out, right? Price came down, failed, and then it never filled the gap. So that is a bad example. But then let's take a look here. You can see this is a gap open, kept going lower, eventually filled the gap. Let's see what else we can get. Let's look for some obvious gaps. Here's one where it gapped down, right? Never came back to fill the gap for a while to the downside. Let's do one more gap just for fun. Here's one, gapped open, ran, never came back. It did come back, but look at this. This is a perfect example. Look at this. Big gap open. We came back and retested the gap window, I believe is what you call that. Support was found. Market rallied. See that? So something to keep an eye on. So we'll watch to see if the Nasdaq comes down and tests that 20,430 level today or not. I am bullish on the Nas. I'm bullish on indices in general. I do think we are headed to fresh highs on the Nasdaq. Path of least resistance, in my opinion, is to the upside here. Until you get something to change, the story looks really good. When we take a look at the Edge Finder's top setups page, we've got Nasdaq on top. Love to see it. Nasdaq, USD CAD, Bitcoin, dollar yen getting bullish readings. We got a lot of stuff to look at this week. This week is going to be busy. We got, let's see, what else do we have? On the sell side, we got euro dollar, very bearish. Love to see this as I'm already in a short position on the euro dollar. Kiwi dollar, euro pound getting some bearish readings. I'm already long Bitcoin. I have some exposure to SMH, which is a semiconductor ETF, which is, the Nasdaq is heavily made up of semiconductors as well as other tech names. S&P 500 is giving us a bullish reading. Dow Jones is more on the neutral side. Dollar yen is one that I want to look at. And the DAX getting a very bullish reading as well. We got some good readings here on the Edge Finder today. Speaking of this, I got a little bit of announcement here for everybody who's watching. We got 426 people here. The Edge Finder this week, we are doing a free week for the Edge Finder, which is exciting. And so here's what we'll do here. The Edge Finder free week, I want to be careful how I say this because people always don't listen and then they get angry. Here's how you get access to the Edge Finder free week. It is not one free week for you whenever you start. It is this week only. The Edge Finder is available for free.
I'm looking for the long game. I think that yen pairs next week yen pairs are gonna rise. Yen is gonna weaken next week. That might set up the dollar yen trade, which has been there for some time now. But I'm not confident that the short-term volatility is going to be in my favor. Meaning, if I buy now, am I going to be stopped out there and then we go higher kind of a thing? And I do a lot of back testing back to 2016. I look back to 2016 a lot, and I don't like, well, if you don't understand what I mean, which is next week, is that we can like dollar bearish and everything falls, but then you have this this 4% move in 2016 and in 2020 we had another. Should we say what was it? That was that one. That was another 1% move, and the 1% move is what it is, but it's 121% 121 pips that year. But later on, the volatility was about 250, and I don't have stop losses for that. So, my unprofessional opinion is that I believe if Trump wins, dollar's going to strengthen. If Kamala Harris wins, dollar's going to weaken. In either case, yen is going to weaken, and depending on gold dollar moves, gold is going to go opposite. Of course, if Trump wins, I think gold is going to go higher. I think that, yeah. So that kind of colors my view. The question, the problem is we have had quite a rise on gold, and why am I going so fast through it is because I'm showing my thought process. The process I want you guys to have as a trader is you look at something split second. I said New Zealand yen was range bound. I'm already over it. Okay. Gold is strong, rising. It's going to continue that way for the longest time that finding your voice is the first step to being successful in trading. Yeah, I forgot it's Halloween. That's why he's doing that voice. No, sir, I am not. I'm perfectly fine. But you guys know I don't have self-esteem on social media and on YouTube. Like, what do you mean? Like, you guys talking to me about my voice? Now, like, seriously, I seriously don't have self-confidence. But it's trading I can do. So if you attack my character or my voice, I'll give you a reaction. I'm sorry, that's just me being human. Point being, gold is likely to go higher. That's what I want to. And I don't know how to get into it. It is difficult for me to get into it. It's kind of like putting your hands into like a, I don't know, an aluminium boiler where it's like it's 1,000 or 2,000 degrees Celsius, whatever that is, or into a nest of wasps. Like, I don't know. I feel like every time I try, I get hurt. So oil fell lower because Israel's response was not adequate, or according to people in the Knesset, or it wasn't strong as the market expected, so that oil fell. That means CAD fell probably also today. Great. Other than that, I am currently looking at higher highs on the Aussie dollar, higher highs on euro dollar, higher high on New Zealand dollar, higher highs on pound dollar, but it currently hasn't happened for the past 1 month. And I'm looking for higher highs and higher lows on yen pairs, but I'm currently having a range Euro yen, we have higher highs, but I don't like it. I didn't like maybe I should have taken that one on Thursday, but hey, too scared, two chickens because it's high. Same thing with pound yen. But again, we are not in the same situation. Every yen pairs at the moment, as I'm the yen man, has a different feel to it, and from now down to the bottom it's still 153 pips. So I'm not interested in it. I think gold will go higher either way because historically spending is high in the first 100 days. Yeah. EU sells? No. Well, of course you can, but you're at the bottom, sir. So, and it can probably continue as well, but there, who was it? Again, you said biosell. Okay. I like your question, but you need to give me more than that. What I mean by that is, what is your analysis? I need to improve your analysis, not just your ability to ask questions. So, I say if we had moved more than 200 to 300 pips, we are probably due for a pullback. We have 440. For euro, that's a local pullback, that's a local pullback, that's a local pullback. But the pullbacks are deeper for every time it goes lower. And I'm not going to say that's bottom, but when it reaches a bottom, it accelerates and it goes a bit further and then it pulls back. So for me, everything tells me this is going to be probably around the bottom, but it can still continue lower if Trump wins. So at the moment, I would say if you're going to sell it, 110 together with Nick and 111 together with me is probably a much better sell area as of a structure more than trying to sell the bottom. As I said, Laura, oil happened because of Israel not attacking the nuclear and the oil fields or the oil production in Iran, and rather took the what was it? Military installations and some kind of air defense systems instead.
I will get in some other trades if I like them. I'll post them in the alert section in Discord later today if I like anything. There's still plenty of time. I mean, I don't have to force all these trades, but I will be going through and chipping away like, okay, do I like PayPal? Do I like McDonald's? How about Royal Caribbean, AMD, some of these yellow ones? I said I'm going to sit on this one. I'm putting the trade in on Caterpillar. I'll sit on that one for right now, but I've got some checking to do. So there's going to be a couple other trades likely sprinkled in to my alert section. And then let's check some top-down stuff. Right now, market still is pretty quiet on the day. It's in fact very quiet on the day, which is as expected. I mean, we have a calm day for Monday as the market just kind of slowly churning. We have a lot of earnings to come, so the market's likely going to create some gap higher, gap lower. We'll see what the overall earnings consensus is. SPY is sitting near the all-time highs, not quite there. I do have some hedges going out for the next couple weeks to see if the market turns. If Mag 7 disappoints in any way, okay, if Mag 7 disappoints in any way, it has enough market cap and enough clout to drag these markets lower. Now, that's a big if. I mean, obviously Mag 7's been like this beloved group for a while. It started out as Fang T-Man, then became the Magnificent 7 to the Elite 3 or whatever the heck people are calling them. But these stocks are pretty much cornerstone stocks, hallmark stocks. They're bellwethers. They're making a ton of money, but it just depends on, are they making enough money? How greedy is Wall Street now to be like, you guys aren't growing fast enough, so we're going to push your stock lower. All right, NASDAQ had a bit of an outperformance last week, still not at all-time highs, but looking better. We do have some semiconductor plays this week. Tesla was probably a big contributor to that last week. Look at the Dow. The Dow had a pretty nasty week. Last week was a big fat red candle on the Dow, but I kind of like where it's at just for the sake that we have a 50 to 100 period. If we get a pullback like that, I'm kind of liking that, again, like the deeper pullback or the slingshot like we had back in August. So I'll be watching the Dow. Russell, same type of thing. Russell's up on the day, which is kind of nice to see. Do we break some recent highs? We'll find out. Do we pull back deeper into these moving averages? It's pretty well supported, right? It's pretty well supported. So if we pull back, I'm still looking to buy some dips on Russell. If we go to dollar's starting to get a little bit choppier here near the highs. So this is a good spot to be watching for. If this pauses Okay, does the dollar end up showing some weakness? Does the dollar show some strength? I don't know, but that's something to watch. The dollar could set us up for this is the swing. You know, I thought we would do a little bit better job of rejecting in this area that I have the yellow box on, and it didn't. So I'm waiting to see what happens. But if this pauses, look for some noise in here. But if we end up making some clean breaks, you know, risk appetite towards the end of the year, dollar weakness makes some sense to me. So I want to keep watching the dollar from that standpoint. Oil, I'm not touching this oil stuff. I think that we are putting so much pressure on this floor that if this floor breaks, you know, the positive thing is inflation goes down if oil breaks the lows. The downside is we've got conflict, geopolitical tensions, war, all this stuff could happen. If oil gets too cheap, it's only the US and Saudi Arabia that make money. Everyone else is going to hate lower prices. Now, we might love lower inflation, but it's, I don't know, there's just so many potential consequences with like super low, cheap oil prices when we don't really have an alternative. You know, everyone's talking about nuclear energy and going back to, you know, uranium and there's shortage of supplies, but we're a long ways from making that like a full adoption. I mean, I feel like solar and wind, it's slowly adopted, but certain areas, utility companies make it impossible to do it. I mean, I've got a friend that lives in California that has solar on his cabin, and basically he couldn't justify it. I mean, looking at like a 10-year, it'd take you like 10 to 15 years to recoup what you put into it. And then, you know, I don't know. It hasn't taken, alternative energy hasn't taken the same way. So I think it's inevitably going to have to happen. But right now it's like oil, I think, makes me a little bit nervous at the floors that we could just break it. So I'm not trying to call bottoms, even though it's well supported. Risk defined is fine, but I'm not calling bottoms here. Same thing on CL. And that's part of the reason I stayed out of the trade is because I made a lot of profit on oil just trading CL because it's, you know, futures contract. So I'm, you know, risking maybe $500 a contract to make like $600, $700, $800 a contract, which works out favorably. But if this floor breaks, I mean, that's an easy avoidance. So I'm just going to stay out of it for right now. Gold and silver, and then I'll wrap things up here in just a few minutes. Gold is at 27.42. We're just off all-time highs. You know, I'm still waiting here. Like, if the market keeps going higher on gold, I'll just watch the portfolio melt up with the position that I'm in. I'm not adding aggressively at these highs. I want to see a dip. I want to see a pullback. That's it, man. That's it. It's that simple. If I'm going to add more to my gold position, it's not at all-time highs. It's that simple. So if we have a pullback, I'm going to add. If we don't, I'm going to watch it melt up, and I'm going to watch my portfolio go higher with the position I've already established. You know, I was long in gold way back here. So I don't need to be greedy sitting here at all-time highs hoping it goes higher. I had gold in here, I added, and it's just been watching positions just pay out. So I don't need to be crazy. I want to see a dip or a pullback. Okay, silver, same thing. I want to see a dip or a pullback. If I don't get one, well, I measured my profit up here. I've got ownership of SLV. I've got some futures contracts as well. If I hit my measured move, I'll take some profit. It's not that hard. So I want to add to both gold and silver. Silver is probably a better space because I think this is where we ultimately get towards like $46 or $47. So if I can add on dips here and this continues and continues and continues, then silver to me has more measurable upside than gold. Gold is just at all-time highs and it's going to continue to be momentum. But silver at least has a technical measured move to 36 and 46 that I can, you know, play on the chart, which is why I'm in it. Okay. All right, Bitcoin 68.6. We're back up in the same little choppy zone. Watching it, you know, let's see what happens. If it breaks higher, watching this area on Bitcoin. So nice little push up. If this is a bull flag, you know, bulls are going to have to make another fresh break above 69 or 70,000. Do we get back to 74? Do we break 74? 74K, if we get above it, everyone's going to start talking about 100K. You know, it'd be an awesome way to cap off the year. If we had a move towards 100,000 on Bitcoin, that'd be awesome. Okay, if we don't, then we don't. But we'll see what price gives us. I mean, again, same thing. It's like all the exposure and accumulation in here. If it goes up to 100K, great. Am I adding at these highs? No. If we have pullbacks towards like 60 or 52, I'll probably add some additional exposure on Bitcoin. Ethereum, is it going to follow suit at all? It's a long ways from 28.15 right now, but that's where I want it to be. Copper, staying out of this for right now. Nikkei, big rip on Nikkei today, but still, really choppy after that fall from July to August. DAX is off all-time highs. FTSE still sideways. HSI is up 0.65 today. Let's see these other stocks. HSI, so BABA, decent little candle on the move, stabilizing around that 50% zone. Baidu, big pullback towards the 786. Let's see what happens if this one stabilizes. That's part of the reason my P&L is up so much today. I'm showing 31.5 in P&L on the day. That's good. That's a new fresh high for the portfolio. But a lot of that's attributed to just to come back in China. I'm still not out of profit. That's a floating P&L. So, but if China gets back into near these highs we saw back in early October, then I'll likely be looking to protect and take some profit. FXI, some credit spreads in here. KWeb, I don't know. It's showing this is good. This is not a bad sign to see green in China. 41.64. I could get this called away this week. Let's see what it is right now. JD. I've got a covered call at 42. It's trading at 41.61. This is out to this Friday. If I make this trade a winner, I'm gonna get this called away for like $1.18 or so, I believe. Let me double check that. So check my break even on JD. It should be like $1 something. $1.18 per share. So if I make $1.18, it should be like $600. Yep, $590. So let's see. I want to look at this really quickly. So there are my shares. That's 1, 2, 3. So this account, JD. So I have the shares. I've got the cover call at 42. Then I have some income plays, which are going to be mostly in profit. Those are a ways out. Let's see here. Let's go 42. If I roll this, I just want to do a quick roll. Right now, if I roll it out by a week, I get another 90 cents credit. So I can keep the strike price the same. If I roll it down, I get $1.15. So I lose out on 50 cents, but I make 65 cents and I lower my cost basis. I think I'm okay just letting it get called away. I'll think about this. I could do a roll. I mean, this gets me another $500 or $600. So what I would be doing here, so if I do this covered call and I roll it out by a week, I get 92 cents. So if I've got 92 cents at 500 shares, that's increasing my profit potential by about $500. Now, obviously that's good. But if JD doesn't cooperate and it goes down, I mean, my goal should be lowering my cost basis overall. So let me let that marinate for the morning. I'll think about whether or not I want to roll it because I'm going out farther if I do. So we'll see what happens. I don't mind it getting called away this week, and I can always get back in if I like it.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.